What's going on, guys? So, a pretty good day today. I think that overall we saw price action follow through from our analysis yesterday, with the exception that I think, and this was a suggestion from one of our members over Trending Waves, that perhaps price action is within the wave one rather than the ongoing wave three. Because if you guys remember, I presented and I was proposing that maybe the wave one had completed prior to the Fed announcement, and this pullback into the wave two was the announcement, and then we were selling off. Now, based on RSI and some traditional indicators, I think that that may be the case, and likely we're gonna get a pullback into the wave two. So I'll review that with you guys in just a second, but I want to take you guys to the daily time frame real quick, and I just want to show you guys or remind you, because I reviewed this with you guys yesterday, the overall picture of where I think price action will head towards in the near term, right? Now, is it the wave one and two? That's what I'm thinking. I've done my research. I think that there's a lot of other analysts and big guys still calling for this to be the case. So we're gonna hold on to it. We're going to make this our primary account as long as it remains valid within our guidelines. All right, so what is our price targets for this? So we have a range. Okay, we can't tell for sure the bottom is this exact number, but we could give you a range. And that range is between the $355 handle to the 323. That represents a 38.2% retracement and a 50% retracement of what? Of the entire COVID rally, all right, from 2020 to 2022. Okay, so why do we have these two zones? Now, this is a retracement of the wave one, all right, to the wave two to get a target, all right, or projection of wave two, right? That's Elliott wave guidelines associated with Fibonacci retracements. So to add to that, right, we also have confluence with our previous high in September of 2020. Okay, we have 38.2% retracement. I'm actually going to draw a box here, and I'm going to review this quickly, all right? And I'm going to show you that this zone is sort of the idea or the logical next best case for the market, all right? So if we don't stop here at the 38.2% retracement and we start dipping lower, then we are finding ourselves in the middle of the range between those two zones that I just explained to you guys, because that is our previous all-time high before we got the COVID lows, right? Before we sold off into the COVID crisis. All right, so that represents that zone. That's why I am a little bit more confident that perhaps that may be the case. So you can see here, this was the previous all-time high, and this was a pretty good consolidation in the higher degree time frames before we ended up rallying to the upside. And additional, this represents 38.2% retracement and the 50%. We are also seeing levels in the RSI hitting oversold conditions. All right, so we'll take it a day at a time, but that is what I'm tracking, and I hope that you guys are also doing so. All right, so back to the 1 hour time frame. All right, if you guys want Elliott wave analysis, consider joining Trending Waves. We update our members every single day. We post these charts with commentary to keep you guys updated on the intraday and throughout the entire session. So if you guys remember yesterday, this was my thesis, right? This was my proposal. I was expecting wave one and two to have completed, and we were continuing lower. Now we took a trade here yesterday, post Fed, after the announcement, and we ended up taking profits on that SQQQ trade that I mentioned to you. Now, a member of ours, as I said, presented the idea that perhaps this was the ongoing wave one, and it makes sense actually. So if we take a look at the RSI, we see that RSI is making a higher high while price action is making a lower high, all right, a higher low rather. And so what does that mean? Well, why does that matter? Because in Elliott wave, right, just a quick educational content, in Elliott wave, we usually see bullish divergences at the end of a cycle, whether it's the fifth wave or whether it's the C wave. All right, in this case, it's the fifth wave, and we have evidence of that. We're going to count those waves right now. I'm going to show you. So being the fact that we're making a low on price but a higher low, higher high in RSI is giving me the idea, or is indicating to us, that perhaps this is the case. Now, taking you guys down to the 30-minute time frame, and we're going to take a look at the wave count, and then we're going to show you guys what the possibilities of a retracement for the next targets are going to be in the resistance, so that we can look for a possible short opportunity to take us to the third wave. Now, June 2nd, we got the wave one, pull back into the two, the third got ABC into Powell, and then we sold off into the fifth wave. All right, now we may see price action head just a tad bit lower, or just um like I said yesterday, in the lifeline technical analysis, it doesn't exist, just don't mind me, but maybe just sideways, because you also have to remember tomorrow is quad witching, so it's a big event in and of itself. And so we may find ourselves selling off a little bit, but maybe giving traders hope that a rally is in its way and trap some bulls, so on and so forth. So what are those targets to the upside that we're going to look for? Assuming that today was the low, we're going to turn on the 23.6 and 38.2% retracement. That takes us to a $383, $375 handle. So it is around this zone that I will look for a possible short opportunity to give us exposure to the third wave. All right, guys, so keep your eyes out for that, because that zone is pretty critical. It goes towards the high of the sell-off after we got the Fed announcement, and then we likely start filling gaps here and there. Now, take you guys over to the triple Qs or the Nasdaq ETF. Same deal over to the daily time frame. So we're looking for a pullback. Although this one has breached the this is September 20 high, right? We're now looking for a possible next target down towards the previous all-time high in 2020, all right, prior to the COVID lows, all right. So that still has a long way to go before we're able to understand if that's a possibility. We are 11% down to the downside, which is tremendous, right? It's pretty big. So back into the 1 hour time frame. All right, so wave one, A, B, C. We're looking for the C wave. I mean, again, this is not where until we get the third and then the fourth, we're able to project where the fifth of C of 2 is going to be. For now, what we're going to look for is the possibility that even here again, we're also seeing some sort of divergence. We're looking for a possible pullback in towards the zone, the 288 and the 282 before we start seeing price action head on lower. Okay, guys. Once again, if you guys want everyday Elliott wave analysis with this type of chart or your individual names, just hop on over Trending Waves. All right, the link will be pinned down in the comment section. We'll provide you with the charts and we'll give you commentary on that as the day goes. All right, guys, if you guys also have any questions, let me know your thoughts about reaching that 2020 highs, those two levels that I mentioned to you guys. And let's have a discussion. Okay, thank you so much for tuning in. I'll see you guys tomorrow. Take care.